Here's a question your realtor's praying you won't ask. If this is such a great investment, why can't I get insurance? Because that's the question that ends deals. That's the question that reveals the truth hiding underneath all the granite countertops and resort-style pools. Florida's real estate market is built on a beautiful lie that you can buy property near the coast or even near-ish to the coast and live the same financial life you would anywhere else. But insurance companies don't sell lies. They sell math. Cold, brutal, probabilistic math. And that math is telling a completely different story than the one you're hearing from everyone who profits from your signature. The 3 insurance mistakes I'm about to show you aren't about finding a better rate or a better carrier. They're about understanding that some homes in Florida aren't insurable at any price that makes sense. And if you can't see that before you buy, you won't be able to unsee it after. Look, if you're tired of real estate videos that tell you Florida's the promised land without showing you the insurance nightmare that's destroying families right now, do me a favor and hit that like button. And if you want someone who's actually going to tell you the truth about what insurance is doing to Florida buyers, not the version that helps close deals, but the version that keeps you from making a $250,000 mistake, go ahead and subscribe. Because I'm not here to get you excited about square footage and no state income tax. I'm here to make sure you understand the one cost that can turn your dream into a trap you can't escape. So let's get real about what's actually happening. Most Florida real estate content tells you where to buy. This video tells you how to not get destroyed by the one cost nobody warns you about properly: insurance. Because here's the truth that makes realtors deeply uncomfortable. There are homes being sold in Florida right now at prices that seem reasonable, in neighborhoods that look perfect, that are fundamentally unaffordable once you factor in what insurance actually costs and how unpredictably it changes. The core misunderstanding isn't that people don't know insurance exists. Everyone knows that. The misunderstanding is that people treat insurance like it's predictable, like it's fixed, like the number you see at closing is the number you'll live with. It's not. In Florida, insurance is the variable that destroys budgets, ruins refinances, and traps families in homes they can't sell and can't afford to keep. This video is going to show you the 3 specific mistakes that almost every Florida buyer makes with insurance. Mistakes that seem small or technical at the time, but that compound into financial catastrophes. We're going to talk about the geography mistake, the carrier mistake, and the calculation mistake. And more importantly, I'm going to show you how to identify these mistakes before they identify you, how to read insurance, availability like a crystal ball, and how to make sure the freedom you're buying in Florida doesn't become a cage built from premium increases you never saw coming. You deserve to know what insurance companies know. You deserve to see the map they're drawing when they decide which properties to cover and which ones to abandon. And you deserve to make a decision based on the full financial picture, not the one that fits neatly into a pre-approval letter. So let's get into this, because if you're serious about buying in Florida, the insurance conversation isn't something you have after you fall in love with a house. It's the conversation you have before you even start looking. Let me show you why. The first mistake is what I call the geography mistake. And it's the cruelest trap in Florida real estate because it's completely invisible until it's too late. There's a zone in Florida, invisible on maps, ignored in listings, never mentioned in open houses, where you inherit all the insurance pain of being near the coast without any of the benefits that make waterfront properties hold value. It's roughly 5 to 15 miles from the water, depending on elevation and local topography. Close enough that hurricane models light you up in red. Far enough that you don't get the view, the lifestyle, or the buyer demand that justifies the cost. Let me explain how insurance companies actually think about this, because once you understand their logic, everything else makes sense. Insurance companies don't price based on where you want to live or how beautiful your neighborhood is or whether you have good schools nearby. They price based on wind speed projections, storm surge models, and historical loss data. They have teams of data scientists running simulations 24 hours a day, 7 days a week. They're modeling what happens when a Category 3 hurricane makes landfall 30 miles north of you. They're modeling what happens when storm surge pushes 8 feet of water inland. They're modeling wind damage at 120 miles per hour. and they're calculating down to your specific address what the probability is that they're going to have to pay out a massive claim in the next 10, 20, 30 years. If you're in this zone, this coastal adjacent zone, your rates will be astronomical, often matching or exceeding what waterfront owners pay. But here's the devastating part. Your home won't appreciate like waterfront properties do. Because waterfront is scarce. Waterfront is desirable. Waterfront has intrinsic value that survives hurricanes, that bounces back after storms, that attracts wealthy buyers who want it regardless of risk. When a hurricane hits a waterfront community, it gets rebuilt fast. The infrastructure gets prioritized, the media covers it, the investment flows back in because those properties are valuable enough to justify it. But coastal adjacent neighborhoods, you're in this terrible middle ground. You're in the damage radius without the prestige. You get the power outages that last for weeks. You get the roof damage, the flooding, the debris, the chaos, but you don't get the rapid rebuild investment. You don't get the community resources, you don't get the attention. You're just close enough to suffer the consequences, but not valuable enough to prioritize. And insurance companies know this. They've run the numbers. They know that coastal adjacent properties are high risk without the high value to justify covering them. So they either won't insure you at all, or they'll charge you rates that make ownership financially impossible. The real trap here is that this zone still gets marketed as desirable. Realtors sell it as a smart compromise. You hear phrases like close to the beach or coastal living without the premium price tag or easy beach access, and it sounds great. You're thinking you're being smart. You're saving maybe $50,000 or $100,000 by not buying directly on the water, but you're still getting that Florida coastal lifestyle. Except what they don't tell you, what they can't tell you without killing the deal, is that insurance actuaries have drawn a circle around the coast, and if you're inside it, you're paying coastal rates. Period. No exceptions. No amount of shopping around will change the fundamental math. Here's what you need to do before you even tour homes. I'm serious about this. Before you fall in love with a kitchen or a backyard or a neighborhood, before you start imagining your life there, you need to call an independent insurance agent. Not one referred by your realtor, because that agent has a relationship with your realtor and wants to keep getting referrals. Find an independent broker who doesn't know your realtor and doesn't care about your deal closing. Give them specific addresses you're considering, not zip codes, actual street addresses, and ask them to quote coverage from at least 3 major carriers, not Citizens, not the state plan. Major private carriers like Allstate or State Farm or USAA. If they can't get you quotes from at least 3 carriers, if they start talking about Citizens property insurance right away, if they hesitate or say the market is challenging right now, that's your answer. That's the market telling you this property is too risky. Citizens isn't insurance in the traditional sense. It's admission that the free market has already decided your property is too risky to cover profitably. Citizens is the insurer of last resort. It's what happens when every private company looks at your address and says, no thank you. And Citizens rates aren't stable. They're not capped. They rise aggressively year after year because Citizens isn't trying to make a profit. They're trying to stay solvent while covering all the properties that nobody else will touch. And they have the legal right, written into Florida law, to assess you additional charges if they have a catastrophic loss year. You're not just paying premiums, you're potentially on the hook for special assessments. You become the insurer's emergency fund. When a major hurricane hits and Citizens has to pay out billions in claims, they can turn around and charge you and every other policyholder an extra assessment to cover the losses. That's not insurance. That's a financial trap. So let insurance be your first filter. Let it be the truth teller before anything else, because if you can't get affordable coverage from multiple carriers, that property is off the table. I don't care how beautiful it is. I don't care if it's your dream layout. I don't care if the schools are perfect. If insurance companies won't touch it, or will only touch it at rates that consume a massive chunk of your monthly budget, you're walking into a disaster. But here's where it gets even stranger. Because the second mistake isn't about where you buy, it's about who you trust to protect it. And most people get this wrong because they don't understand what insurance companies are actually selling you. When you get an insurance quote at closing, When you see that number on your closing disclosure and it looks reasonable and you feel relieved. You're not actually buying stability. You're buying a 12-month promise, that's it. A promise that can be broken with 45 days notice. And in Florida right now, that promise is being broken thousands of times every single month. Major carriers are exiting the state entirely. Regional carriers are collapsing under claims they can't pay. And homeowners are discovering that the company they trusted to protect their biggest asset just sent them a non-renewal letter and disappeared, leaving them scrambling to find coverage before their mortgage company force places a policy at double or triple the cost. The mistake isn't choosing the wrong carrier. The mistake is believing that any single carrier matters at all in Florida's current environment. Because in Florida's insurance market right now, loyalty is a liability. The carrier you have today might not exist next year. And if they do exist, they might not want your business anymore. They've run new models, they've recalculated risk across entire regions. They've looked at the last 5 years of hurricane data and the next 30 years of climate projections. And they've made a business decision that you're not worth it. What people don't realize, what nobody explains to you, is that insurance companies operate on a brutal, rational logic. They'll insure you right up until the moment their data tells them they shouldn't. They don't care that you've paid premiums for 5 years without filing a single claim. They don't care that you've maintained your property immaculately. They don't care that you're a model homeowner who's never late on a payment. None of that matters. They care about one thing and one thing only: whether the math says they'll lose money on you over the next decade. And when the math changes, they leave. They don't negotiate. They don't grandfather you in. They just send a letter and they're gone. Here's what's happening behind the scenes that almost nobody talks about. After every major hurricane, after every significant weather event, carriers recalculate risk across entire regions. They're not just looking at properties that got damaged. They're looking at properties that could have gotten damaged. Properties in the projected path. Properties with similar elevation profiles and construction characteristics. And they're raising rates or dropping coverage across the board. Your home could be perfect. It could be untouched, pristine, never filed a claim, built to the highest standards. Doesn't matter, you're in the radius. You're in the zone where the models say losses are likely. You're done. I want you to understand how cold this process is because it'll help you think differently about insurance. There are actuaries sitting in offices in Connecticut or Chicago or wherever these companies are headquartered, and they're looking at Florida zip codes on a spreadsheet. They're not thinking about families. They're not thinking about your dreams or your investment or your kids' school. They're looking at loss ratios and probability curves and return on investment. And when a zip code crosses a certain threshold, when the expected losses over 10 years exceed the expected premiums by more than their risk tolerance allows, they exit. They pull out of entire counties sometimes. Tens of thousands of policies canceled with form letters. So here's what you need to do differently. Don't ask your realtor for an insurance referral. Don't use the agent your lender suggests because that agent is part of a network designed to get deals closed. They're not going to tell you the brutal truth about market instability because the truth kills transactions. Instead, find an independent broker, call a few, interview them, and ask them this specific question. How many Florida carriers have you lost in the last 3 years? If the number is higher than 2, if they've had multiple carriers exit the market or stop writing new policies, the market is fundamentally unstable. That's not normal business churn, that's a collapsing market. Then ask them this: what's your backup plan when my carrier drops me? Not if, when. Because in Florida right now, non-renewals are the norm, not the exception. If they don't have a clear, confident answer, if they say something vague like, "Oh, we'll figure it out," or "Don't worry about that yet," you're working with someone who's going to leave you stranded when it matters most. You need a broker who has relationships with multiple carriers, who knows which companies are still writing policies in which areas, who can move you from one carrier to another, before you end up in a panic with 30 days to find coverage. And here's the move almost nobody makes, but absolutely should. Ask for a multi-year rate projection, not just what you'll pay this year, but what they honestly think you'll pay in years 3 and 5 based on current market trends. If they won't give you a straight answer, if they dodge the question or say it's impossible to predict, that should terrify you. Because what they're really saying is the number is so bad, the trajectory is so steep, that if they told you the truth, you'd walk away from the deal. And maybe you should. Maybe that's exactly what you should do. So you've checked the geography and you found an honest broker who's telling you the truth about market instability. You think you're protected now, right? You think you've dodged the traps. But there's a third mistake, and it's the cruelest one of all because it hides inside math that looks totally fine on paper, but becomes unbearable in real life. When your lender calculates what you can afford, they use a debt-to-income ratio. They take your gross monthly income, and they compare it to your total monthly debt obligations. And for housing, they add up your mortgage principal, your interest, your property taxes, your homeowner's insurance, and your HOA fees if you have them. They bundle it all together and call it your monthly housing cost. And as long as that number plus your other debts, car payments, student loans, credit cards, doesn't exceed a certain percentage of your income, usually around 43 to 50% depending on the loan program, you're approved. Sounds reasonable, right? Sounds like responsible lending. Except there's a massive problem. The insurance number they use in that calculation, the number that determines whether you're approved or not, is the quote from closing. And that quote is fiction. It's a snapshot of a cost that will change, often dramatically and always in one direction. Up. Always up. The mistake is thinking that getting pre-approved for a certain mortgage amount means you can afford that house long-term. It doesn't. It means you can afford it based on today's insurance rates, which might be 20% lower than what you'll pay in 2 years, or 30% lower, or in some cases, 50% lower. And here's the brutal part. You can't refinance your way out of this. Because when insurance rates spike, when your premium doubles or triples, your debt-to-income ratio gets destroyed. You can't refinance to a lower mortgage rate because the new lender runs the numbers with your current insurance cost, and you don't qualify anymore. You're locked in. You're stuck. You're watching your escrow account balloon month after month, feeling the financial squeeze get tighter and tighter, and there's no escape hatch. Let me paint you a picture of how this actually plays out, because the timeline matters. You buy the house. Closing day is exciting. You get the keys, you move in. Everything feels manageable. Your mortgage payment is $1,800. Your insurance is $200 a month. Property taxes are another $100 and $50. HOA is $75. You're at $2,225 total. Well within your budget. You're thinking you made a smart decision. You've got room to breathe. Then 12 months later, your insurance renews, and the premium jumps. Maybe it goes from $2,400 annually to $3,900 annually. That's an extra $1,500 for the year. An extra $125 per month. Your escrow shortage notice arrives in the mail, and suddenly you owe the difference up front. $1,500, plus your monthly payment is now going up by $125 going forward. That stings, but you pay it. You adjust your budget. You tell yourself it's a one-time thing, a market correction, it'll stabilize. Then the next year, it happens again. Your premium jumps to $5,500 annually. Another $1,600 increase. Another shortage notice. Another immediate payment due, plus your monthly cost just went up another $130. Now you're paying over $450 a month just for insurance. Almost half as much as your mortgage payment. And you start doing the math in your head. You start realizing that over the life of your 30-year mortgage, you're going to pay more in insurance than you paid for the house itself. And that's assuming rates stabilize, which they probably won't. Then year 3 comes. Your carrier sends a non-renewal notice. They're exiting Florida. You have 45 days to find new coverage. You call brokers frantically. Some won't even return your calls because your zip code is blacklisted. Others quote you rates that make you physically sick. $7,500 annually, $8,500. One broker quotes you $12,000 a year, $12,000, $1,000 a month for insurance on a house you bought for $350,000. And here's what makes this so devastating: you can't sell. Because every buyer who looks at your house runs the same insurance quotes and walks away. They see the numbers and they realize what you're now realizing, that this house is a financial trap. You can't afford to stay because the insurance is eating you alive. You can't afford to leave because you'd have to sell at a loss just to get out. You're stuck. You're trapped in a home you loved, now slowly drowning in financial quicksand that nobody warned you about during the buying process. This is happening to tens of thousands of Florida homeowners right now. They're not in flood zones. They're not on the water. They didn't do anything irresponsible. They just didn't understand that the insurance number at closing was temporary. That it was based on old models, old risk assessments, old assumptions about climate and hurricane frequency that are no longer true. Insurance companies are repricing Florida in real time based on updated climate data and recent loss history. And you, the homeowner, you're paying for their updated understanding of risk. You're paying for the gap between what they thought your property was worth covering and what they now know it costs to insure. And that gap is enormous, and it's growing. So here's what you absolutely must do before you fall in love with any property. Before you tour it, before you imagine your furniture in the living room, before you picture your kids playing in that backyard, you need to run the total cost calculation with brutal honesty. Take your mortgage payment, add the insurance quote, add your HOA fees if there are any, add your property taxes, add estimated annual maintenance. And for Florida, figure at least 1% of your home's value per year because air conditioning systems fail, roofs need replacing, hurricanes cause damage even when your house doesn't flood. Then add your commute costs, not just gas, but the value of your time. If you're spending 2 hours a day in the car because you bought in sprawling suburbia to save money, that's 10 hours a week. 40 hours a month. That's a part-time job you're not getting paid for. Factor that into your quality of life calculation. Now here's the critical part. Add a 30% buffer on top of the insurance number specifically. Not on everything, just on insurance. Because that's the cost that's going to rise unpredictably and aggressively. If your quote at closing is $3,000 annually, run your budget assuming it'll be $4,000 within 2 years. If it's $4,000, assume it'll be $5,200. Because in Florida's current environment, that's not pessimistic. That's realistic. Add all of that together. That's your real monthly housing cost. Not the number your lender approved you for. Not the number on your pre-approval letter. Your actual, realistic, likely cost of ownership. And if that number makes you uncomfortable, if it stretches you thin, if it leaves you with no cushion for emergencies or savings or just living your life, the house is too expensive. Even if you're pre-approved, even if the bank says you can afford it, you can't, not really. Not in a way that lets you sleep at night. And here's the final test that separates people who build wealth from people who drown financially. Close your eyes and imagine your insurance doubles in year 3. Not triples. Not some catastrophic worst-case scenario. Just doubles. Your $4,000 annual premium becomes $8,000. Your monthly escrow payment jumps by another $330. Can you still afford the house? Can you still save for retirement? Can you still take a vacation? Fix your car when it breaks? Cover an unexpected medical bill? Can you still live your actual life without constant financial anxiety? If the answer is no, if doubling insurance costs would break your budget, you're buying wrong. You're buying at the absolute edge of what you can afford based on temporary numbers that are guaranteed to change. And when they change, not if, when, you're going to be trapped. You're going to be one of those homeowners sitting at a dinner party, smiling uncomfortably when people talk about their insurance rates, unable to participate because your number is so horrifying you don't want to say it out loud. So now you know the 3 mistakes. The geography trap, buying close enough to the coast that you pay coastal insurance rates without getting coastal property values. The carrier mistake, trusting that any insurance company will stay with you, that loyalty matters, that your coverage is stable when the entire market is collapsing. And the calculation mistake, believing the numbers at closing represent your actual long-term cost of ownership when insurance is a moving target that only moves in one direction. But knowing the mistakes isn't enough, because the question you're really asking isn't what to avoid, it's what to do instead. It's how do I actually buy property in Florida without getting destroyed? Here's what I want you to understand. Insurance isn't a boring administrative detail you deal with at closing. In Florida right now, insurance is the truth teller. It's the market signal that cuts through all the marketing, all the optimism, all the promises about appreciation in lifestyle and opportunity. When insurance companies won't cover a property, or when they'll only cover it at rates that make ownership unaffordable, they're telling you something profound about the future. They're telling you their models say this property is a bad bet over the next 30 years. And you can choose to ignore that. You can tell yourself you're different. You can trust that you'll figure it out. You can believe that rates will stabilize or that you'll find a better carrier, or that somehow your situation will be the exception. But you'll be wrong, because insurance companies aren't guessing. They're not being emotional. They're not being dramatic. They're calculating based on decades of data, billions of dollars in claims history, and sophisticated probability models that predict future losses with frightening accuracy. When they leave a market or spike rates to levels that make properties unaffordable, they're being rational. They're protecting their shareholders, and you should be protecting yourself with the same cold rationality. The people who thrive in Florida real estate, who actually build wealth and stability here instead of getting trapped in financial nightmares, aren't the ones who buy the cheapest house or move the fastest or follow the hype. They're the ones who let insurance guide their decisions from day one. They call the insurance broker before they call the realtor. They get quotes before they tour properties. They treat a difficult-to-insure property the same way they'd treat a house with a cracked foundation or black mold, as a deal breaker, not a challenge to overcome. They understand that saving money upfront by buying in a high-risk area isn't savings at all. It's just deferred pain. It's trading a lower purchase price for years of financial bleeding. And here's the paradox that nobody talks about, the contradiction that sits at the heart of the Florida dream. People move here for freedom. No state income tax, sunshine, space, beach access, the ability to live life on your own terms without the government taking huge chunks of your paycheck. That sounds amazing. That is amazing for a lot of people. But if you make these 3 insurance mistakes, you don't buy freedom. You buy a cage. You become trapped in a home you can't afford to keep and can't afford to sell. Because every buyer who looks at your place runs the same insurance quotes you should have run and walks away. Every insurance renewal becomes a moment of dread. You wait for that letter with genuine anxiety, wondering how much it's going to go up this time, whether your carrier is going to drop you, whether you'll be able to find coverage at all. Every hurricane season becomes existential. You're not just worried about property damage anymore. You're worried about whether your insurance company will survive the season, whether they'll pay claims if disaster strikes, whether you'll be able to get coverage next year at any price. You spend years financially paralyzed, watching your savings drain into premiums that keep rising, unable to move forward or backward. That's not freedom. That's punishment for not knowing what you didn't know. But it doesn't have to be that way. You can do this right. You can move to Florida and build an incredible life here. There are amazing communities in this state, places with reasonable insurance, solid infrastructure, genuine long-term value, real quality of life. But it requires you to be more disciplined than the average buyer. It requires you to ask harder questions. It requires you to walk away from properties that look perfect on the surface, but hide financial disasters in their risk profiles. It requires you to prioritize long-term stability over short-term excitement. Before you sign anything, do the insurance check. Get real quotes from multiple carriers on actual properties you're seriously considering. Not ballpark estimates. Not what the seller says they're paying. Real quotes with your name, your credit score, the specific property address. If you can't find coverage outside Citizens at rates that make financial sense, that property is off the table. No exceptions. No rationalizations. No telling yourself it'll work out, it won't. Then run the total cost calculation with that 30% insurance buffer. Make absolutely sure you can afford not just today's reality, but tomorrow's likely reality. Factor in rate increases. Factor in non-renewals. Factor in the possibility that you'll be shopping for coverage every 12 months for the foreseeable future. Make sure your budget can handle that. Volatility without breaking. And finally, talk to people who've been in the neighborhood for 5 years or more. not the recent arrivals who are still in the honeymoon phase, still excited, still telling themselves they made a great decision. Find the people who've lived through multiple hurricane seasons, who've experienced several insurance renewal cycles, who've watched the neighborhood change over time. Ask them about their insurance story. Ask them how much they're paying now versus what they paid when they bought. Ask them if they've been dropped, if they've had to switch carriers, if they're on Citizens. Ask them if they'd buy the same house again, knowing what they know now. Their answers will tell you everything you need to know. You deserve to make a decision you won't regret 5 years from now. You deserve a home that supports your life instead of quietly dismantling it month by month, payment by payment, renewal by renewal. And you deserve to have information that most buyers never get because the people making money off your signature, the realtors, the loan officers, the sellers, the developers, they have no incentive to give it to you. They get paid when you sign. What happens to you 3 years later when your insurance triples isn't their problem anymore. If this video gave you clarity, if it helped you see the insurance trap before you walked into it, if it potentially saved you from a $250,000 mistake you were about to make, go ahead and hit that like button. Not for me, but because it pushes this information to other people who desperately need it. YouTube's algorithm works on engagement. The more people who like and comment, the more buyers who are searching for Florida real estate information will see this video before they make these same mistakes. You could literally save someone from financial ruin just by clicking a button. Drop a comment below telling me which Florida area you're researching or what insurance questions you still have. I read every single comment, and I'll do my best to point you in the right direction. I'll tell you if the area you're looking at is a red flag zone. I'll tell you if your insurance situation sounds normal or concerning. I'll give you the truth even if it's not what you want to hear. And if you want more honest breakdowns of real estate and money decisions that everyone else glosses over or hides because it doesn't help them make money, the real information that protects you instead of protects their commission, go ahead and subscribe. Because I'm not here to sell you a dream. I'm not here to get you excited about moving to Florida. I'm here to give you the truth so you can build something real, something stable, something that actually works for your life instead of slowly destroying it. Thank you for taking your financial future seriously enough to spend these minutes getting information that could save you years of regret and hundreds of thousands of dollars in losses. You've got this. You're already ahead of 90% of buyers just by watching this video, just by asking these questions, just by being willing to hear uncomfortable truths before you sign. Now just do your homework. Get those insurance quotes. Run the real numbers. Talk to long-term residents. Trust your gut when something feels off. And don't let anyone rush you. Not your realtor, not the seller, not your family who's excited for you to move to Florida, nobody. The right home, in the right area, with insurance that actually makes sense. That's worth waiting for. That's worth being patient for. Because the alternative is spending the next decade trapped in a beautiful nightmare you can't afford to keep and can't afford to leave. And you deserve so much better than that.